Jennifer Goodspeed with the Goodspeed Group, and I am here today with Adam Snively, mortgage lender, who I trust and use often to recommend to clients that I work with. And he's going to explain to us the mortgage process. So it's always very important to be pre-approved before you even start the home buying process. And you can certainly do that through Adam. But what happens when you have an accepted offer? So we've picked out that home, we've written an offer, we have an accepted offer out, and we're moving towards closing, which is about 30 days. So Adam, what can the buyer expect to happen once we have an accepted offer?
Yeah, so again, once we have that pre-approval process that can be done over the phone or online, I'll generally, again, that accepted offer comes in. I love to meet with buyers if I can. If they're not able to, then we can do an e-sign application as well. But that first process involves signing the mortgage application and disclosures. And that's, again, all the information that they gave me through the pre-approval process and just putting it to paper and signing that it is accurate or if we need to make any changes. After that application is signed, I also ask my buyers to bring in documentation to support the original information, things like W-2s, pay statements, 30 days pay statements, bank statements, and tax returns are also needed for self-employed borrowers. During that time, a lot of will look to potentially lock the interest rate in, and that will be fixed through the whole process. Once we have all that information, we will order the appraisal fairly quickly, and then we will submit all the documentation that they gave me plus the mortgage application and disclosures to an underwriter. The underwriter will review all of that information. They'll let us know if they have any questions. Sometimes there'll be questions on bank statements, if there's large deposits that are not explained. Those type of things can come up, and we will get an answer from the borrower on that. Once we receive that and the appraisal, we get final loan approval. Now, once we have final loan approval, a change that's happened in the past year is we will work with the title company. Our closing department will work with the title company to get what's called the closing disclosure. And that's going to show the total amount that's going to be due at closing. It's important that that is signed 3 days prior to closing in order to close on schedule.
And so this process, obviously is a 30-day process. I know that they're going to give paycheck stubs and bank statements and those types of things at the beginning, but can they expect to have to submit anything right before closing?
So a couple things before closing. Sometimes we'll need updated bank statements to show earnest money was taken out of the account, so that you can expect that. Also, some important things, we want to make sure that the documentation they provide, the bank statements, the employment, all of those are still are very close to what we talked about. So the bank balances should not vary greatly. It is important that they are still employed right before closing. We will do a verbal verification sometimes the same day of closing, which is required. And so it's important that all those things stay accurate. Another thing that would be very important is not to increase their credit card debt significantly or open up new credit cards prior to closing.
Okay, so that's very key because I've seen deals fall apart and not close because the borrower or buyer, in this case, opened up a new credit card, bought a new car, bought furniture for their new house, and it made it so that they didn't qualify for the loan.
Yeah, debt to income ratios can increase. We can be closed right before closing. It can throw them over their debt to income ratio, which is just a ratio looking at their income versus their total liabilities listed on their credit reports. And it can. We've had that happen before where people have made those decisions, and unfortunately, they don't qualify for the loan anymore.
Awesome. Very, very important that when you at the very beginning of that process, when you meet with a mortgage lender, and Adam is fantastic, and to be upfront, honest, give all the information because everything always comes out. So make sure that you're upfront and say everything, income, debt, and then of course listen to the advice of your mortgage lender so that you can get to closing.